trading at its best.
I'll just go ahead and let you know, for those of you that don't know who I am, I'm Mike Swanson, the founder of TradeWest Forex and Momentix. It's been our latest software we've been releasing, and we started holding these weekly webinars not too long ago. I think it's been a little over a month. Before that, we did 101 webinars, and it was a little bit different approach, more simple content as we were covering. And the good thing is we record all of these and put them on the same page where you sign up. So looks like some of you, this is your first time, so let's go ahead and take a look at what we're going to be talking about. It's trading the news. So you guys should have been able to get, you probably got our email with the update on that we posted this on the blog. We have a blog where we post an article about what we're going to talk about in the webinar, kind of a summary of everything, and then we get in here in the webinar and go over it all. So so you guys should have a good idea of what we're going to be talking about if you've read the blog already. So let's go ahead and let me bring up a web page here really quick. Actually, I'm just going to show you guys really quick first here the blog. You can see it's just tradewestforex.com/blog. You can see all the previous articles on here if you scroll through. But you can see here's the post. It was posted yesterday. And like I've been saying before, I'm trying to see if we can get them posted earlier in the week. But we've been so busy lately, it seems like I'm not able to get it updated till, just the day before the webinar. But anyways, you can see just a summary of it there, and then here's where you can see the link to where you guys signed up for the webinar, and below that is all the replays. Okay, so now let's get into get into what we wanted to cover today. Let me just jump over here to another web page. Okay, let's see if this will come up. Okay, I know that this web page for some reason wasn't wanting to come up last night when I was posting this blog, doing this blog post. So, but it's up. It looks like it's up and going now. It's just the Forex Factory website. Before we go into what you see here, let me just tell you that this concept we're going to be talking today about trading the news and the fundamentals and events is something that a lot of traders don't pay a lot of attention to. And a lot of you, I'm sure, you found yourself on the wrong side of the news or the wrong side of an extremely fast, volatile move in the market. And you can usually tell it's when the market just starts taking off 10 to 20 pips in seconds, and sometimes even more than that. I've seen it jump 50 to 100 pips, and over a few minutes, the market could have moved hundreds of pips. And if you're on the wrong side of that, it can be really dangerous, because actually stop losses and trade executions and spreads and all that are not guaranteed during the news. So you want to be aware of these things, because you can have a perfectly fine, winning trading system, technical trading, and then the news can come along and wipe you out. So it's really something you guys need to understand, and that's why we're going to do some of this training today. So where can you get this information then? Where can you find out the information about the news and how to interpret it? So there's a lot of different resources out there. Some of them cost money, others are free. Some have more information than others. Some are more reliable than others. And the one I like to use is forexfactory.com. That's the website you guys see in front of you here. It'll take you right to the calendar. And what it does by default is just shows you the current day, and you'll see that it's showing it in, I think they do it by default as Eastern time. And if you want to change that, you can click here, and you can configure your time zone and configure some settings here. So if you wanted to change the start of the week, if you don't trade on Sundays, you want it just to show you the start of the week is Monday, you can do that. There's just some different options here you can change up. So that's the first place you'd want to go. So that way you can just read them in your time zone. You know, so for me, I'd probably come in here and set it to Mountain Time. We have daylight savings, so I can hit save on that. And now, if I go back to this page, go back to the home page, now all the events are going to show up in my time zone, which is probably going to be what you want. Just a lot easier to make sure you're seeing the right time and not having to do any math to try to figure out how far away it is, how far away a news event is. Okay, so let me show you here that you can actually go look at past events and even upcoming events. By default, they just show you the current day. So if you click here, you can tell it a begin date and an end date. So if I want to see what happened this week, I could go back to the 23rd till today, hit apply, or I could even, there's another button there that just says this week, next week, last week. They have some shortcuts there. Now I can see everything broken down by day for the week. And the next thing you want to be aware of here is the currency. Sometimes there will be a news event coming out, but there's a chance that it may or may not affect you, depending on the currency pair you're trading. So what you have to know is, though, if let's say there's like we had here Monday, there was a high impact, and I'll show you what this means here in a second. There was an important event that came out on Monday for the euro that's supposed to affect the euro currency. Now that doesn't mean that other pairs that don't have the euro in it are going to be okay and you're immune from the news. In fact, some pairs that don't have the currency in it can be very volatile, and that's because of correlations. And you know, we might have another day where we talk about currency correlations, but basically, if you look at the euro dollar, for example, against the U.S. franc, see, the U.S. franc doesn't have the euro in it, but those two currencies are highly negatively correlated. And what that means is if the euro dollar goes up, you can expect the U.S. franc to go down. So if the news came out positive for the euro and pushed the new or currency pair up, the U.S. franc that doesn't even have the euro in it would probably go just as far down. So you got to be aware of that. And like I say, it'll probably be good. Possibly next week we could talk about these currency correlations in more detail. So the best thing you can do is just, if there's any kind of significant event, just don't trade any pairs. I mean, that's going to be your safest way, is just to stay out of the markets. Okay, so now let's explain this a little further here, this impact color and what is high, low, and medium impact. So you can see over here there's a little button that says filter on, and it might say filter off if you haven't done anything here. But basically, if you click on this filter, you can have it exclude and hide certain events that you may not even care about. You know, for example, they've got these yellow and this gray. You know, this one's non-economic. This yellow one is low impact expected. I turn those off because they really don't matter to me. Where I want the medium and high impact on, because what that means is there's volatility expected. If there's, if the numbers come out a certain way for the event, it can cause extreme movement in the markets. So these are the ones I want to pay attention to, and especially the high impact ones in red. And so if you wanted to, you could turn off certain event types if you think they're not really going to affect your strategy. Speeches and things. You got to be careful with some of these because the speech might start at a certain time, but it could last for an hour. It could start at, we could go look at some of these. There's probably, right here. Treasury speaking at 3 o'clock. That could last an hour, and the important stuff may not be released till halfway in. So you've got to look into detail on those, and I can show you how to do that in a minute too. But you need to pay attention to those types of events because they're going to be a little bit different than something like some earnings numbers or sales numbers and things like that. That the second the time hits that number, the second that it's 6:30 a.m. durable good orders came out. So it's right on the dot. So really the main things is just those speeches. Those are the only things that are really going to be possibly delayed movement from the markets. Okay, then you got your currencies. So if you don't care about some of these currencies, news events, because there are some that don't really do much to the markets, you could turn those off. I just keep them all on because I like to be just aware of anything that could possibly affect the market. But anyways, that's some settings you can come in here and change up. So you'll see that's why mine are only showing high and medium. It's because I've got those two things turned off, and then you just hit apply. Now, if I, if I'm going to be trading on Tuesday, I can be like, okay, maybe I'm going to trade Tuesday morning. I can see that there was a high-impact consumer confidence coming out at 8 a.m. So I would want to be on top of that. If I'm going to be trading, be sure that I'm out of the market at least 30 minutes before and 30 minutes after. I'm not going to want to be in any technical trade unless I've properly planned for it, or unless it's a swing trade where the news isn't going to affect me as aggressively as like a day trade. In fact, the news might be part of my swing strategy. So that's kind of the way I do things, is I like to avoid it before and after, because a lot of times, even just before the event comes out, the market's starting to adjust. You'll start to see some volatility, especially during non-farm payroll. And I'll talk about more about that specific event in a little bit here, but that one can definitely, several minutes before the event even comes out, it can really the market can start whipping around, taking out traders before it even moves. So, or before the event even comes out and kicks in, really gets the market moving. So let me keep going over here now. The next column is detail. So this is where you can see what this stuff really means and what you can expect. So you're going to want to do this if you plan on trying to trade the actual news. Now there's some traders that this is their strategy, is learning the fundamentals, and based on the way the numbers come out, they establish positions, whether it's to scalp that for those few minutes, or for a day trade, or for adjusting their swing trades. So you can use this information. It tells you where the information comes from. This comes from the conference board. It tells you what it measures. So consumer confidence is the level of composite index based on surveyed households. It says the usual effect is that if the actual number, is greater than the forecast, it's good for the currency. So you'll see here's the actual number, 81.4. The forecast was 75.4. So since it came out greater, they colored it green. And the green number means that it was positive, it was good for the currency, just like they're telling you here. But they do say usual effect. So be careful, because there are times when it come out positive and the market will go the other direction. And that a lot of that usually comes from what the news is saying during it being released, and kind of the way they come up with certain decisions, or they have other factors. So it's not always going to be the case, but that's why news trading isn't just cut and dry where if it's positive, buy and you're going to make money. It doesn't always work that way. The next thing is they'll tell you the frequency, how often this event comes out. It's it's every last Tuesday of the current month. So it comes out every month on the last Tuesday. And the next release, so this one was the June 25th. It says the next one will be July 30th. And then they have a little thing that says, why should traders care about this? And this kind of tells you why it affects the markets the way it does. So they say that it's the financial confidence is a leading indicator of consumer spending, which accounts for a majority of overall economic activity. So it's how much spending consumers are doing. If they're spending more money, they're more confident in the economy, and so that's what they're basically telling you here. It just gives you a more clear understanding of what this number really means to that currency's economy. Now it tells you how they come up with the number. says they do a survey on about 5,000 households, which asks residents to rate the relative level of current and future economic conditions, including labor availability, business conditions, and overall economic situation. So that's how they come up with the data. And then it says ACRO expand the conference board. So they give you quite a bit of information here. That's why this resource is one of the best. There's others that just tell you the numbers. They don't really tell you what it all means and how it's going to affect things. So this is a resource that kind of does a lot of that work for you and puts it all in one place. And they even show you the history. So if you want to see what happened last month, you know, you could go say, okay, May 28th was the last event. And you can see here that it was actual 76.2. The forecast was 70.7. So it came out positive. And I forgot to tell you, there's one other number here. It says previous. So they'll tell you the previous month's number, but then tell you if it was revised or not. So you see, here's the previous month, 68.1. They come in here and tell you in May that that number was slightly off. It was actually revised to 69, which was actually a little bit better. So that adds to this month, May, telling you it's even a stronger indication of it going up. And other times it'll be lower, and sometimes you'll be conflicting, like right here, where the number came out lower, but the previous month was higher. So there's sometimes you get that conflicting, and that can also be another reason why, if the market was expected to go down, it could instead go up, because maybe that last month's number was so far off. Okay, but you can actually, you can click on, if you click on the history, it'll take you back to that specific week, and you can get that. You can see what else was happening that day. So it's all connected. They've even got a graph here. So if you want to see kind of the pattern of the, you know, how far off the economists were on their forecasts, and just the overall picture, you know, you can see that it's obviously come down when there was all these market crashes in 07 and 08, all the way through 08. Consumer confidence obviously was going down, which is what you would expect. And then it kind of flattened off, and it's slowly been making its way higher. And you can even go way far back here. You go back to 2000. You can see where it was really high in the year 2000. And just everything's been gradually going down. And it hit bottom in 09. Beginning of 09 was the bottom. And since then, we've climbed up about halfway. So anyways, you can also see the revision here. You can turn that on, see how far they were off, the revisions. A lot of this stuff, if you're really planning to trade the news, you could go in and do a lot of research and learn some patterns, and that's what a lot of news traders do for day trading it, and even just for affecting their, or adjusting their swing trades. Now, let's see. There's another resource you can use that will show you a currency chart at the same time that that event came out. I think that's Forex Peace Army that does that. And maybe we can look at that here in a minute. But if you, let's see, if we go, let's close this down. I think we've pretty much looked at it all. You can hit more and show you more events. But that's pretty much all the data. That's everything you really need about a news event when it's coming out. So if we go back to today, let's go back to this week. Okay, you can see what happened this week. Today, this morning, there was the CAD GDP, Gross Domestic Product. We can click that, and you can see what that means. It's the change in an inflation-adjusted value of all goods and services produced by the economy. So it tells you why traders care. It's the broadest measure of economic activity and the primary gauge of the economy's health. So obviously, greater numbers are good for the currency. And they do that every month. So, actually released monthly about 60 days after the month ends. So it says the next one is July 31st. So that was what, if you were watching today, those of you that were trading today, if we were to go look at the US CAD chart, we could see how that impacted the markets. So let's go bring up Forex Peace Army. I'll show you where you can see how you can easily just grab a chart rather than having to go back and scroll to one, which is really helpful if you're going back and looking at old events. So let me bring up that website really quick here. Okay, so if we just go to forexpeacearmy.com, we can go to Forex Calendar and Tools, and it says Hot Forex News Calendar. We'll click on that, and you'll see that they do things kind of similar, but they don't have the information, all the details laid out like you know, the way that Forex Factory does it. But anyways, we can come in here and see that same news event. Let's go to Friday. Okay, there is, let's see, there's the US CAD GDP, or the CAD GDP right there. So if we go over here on the right, they have a little chart for CAD pound, or not pound, GDP. The US CAD is what we're going to show. You can choose pound CAD and any other currency you want. Looks like they have Euro CAD, CAD Yen. So they have a couple CAD pairs in here. So we can go to US CAD and they'll actually put a little line on there when that event was released. So you can see it was 8:30, and look what happened. Even just before the news, 1 minute before the news, look what happened. The market already had dropped 5 pips in 1 minute there. It was already on its way down. Then the news was released right here. And what it did is it went up a few pips, and then it went down, and over the next couple minutes it made about a 15, looks like a 15 to 20 pip move off of that before it turned and went back up actually. So it initially pulled traders in short and then, you know, possibly locked those traders in on the wrong side as it drove back up 25 pips. So that's a 1 minute chart. You could zoom out and see more. But right here they tell you also the actual forecast and previous numbers. So it was forecasted at 0.1, so it came out as expected. That's why there probably wasn't a lot of volatility, and that's why you've seen this bounce effect, because traders were ready to go short as soon as it was going to come out, so they went short. But then when they realized the number wasn't as strong as they hoped, they started closing positions, and the market went the other direction. And so, I mean, this one, we can look at some other examples. This one wasn't really a big move because there was no deviation. The deviation is the difference between the actual and the forecast. Okay, so let's go look at another one. So there was also the consumer sentiment at 9:55 today. So if we click on a chart for that one, this came out just slightly higher than expected. And the previous month was 84.5, so it was almost the same as the previous month. So again, not a ton of activity. You see, it was right here. It went up about only a few pips in the first minute, but over the next 20 minutes or so, it went up 20 pips. But that's what you expect. Positive number, slightly positive, you get a slower move up. So that one kind of followed what you would expect that news event to do to the market. Let's see if we can find a more volatile one for the week. Let's go back to let's see here. New home sales. Let's see what this one looked like. New home sales. It's still not a big deviation, but there's a little more activity on that one. You can see the minute before the news even came out, it jumped up about 12 or 13 pips. And then when it came out, it took off another 10 pips and then kind of flattened out. So around that news time, there's about a 25 pip move up, which follows the news expectation. Positive number should drive the dollar up against the yen. Okay, let's see. There wasn't really a ton of events this week that were high impact that would. Let's see what else we've got. We could go to the previous week as well. Yeah, let's try that. Let's go back. I don't know if these, how far back they let you go. It might even just be only a current week that you can get the data for. I haven't used this resource for a bit, so it might just be the current week. Oh, here it is. Couldn't find it. They could do a better job trying to let you change the date. So anyways, we could go back here to the 17th to 22nd. I guess it go 25th. Okay, so last week we had CPI for the pound, high impact event right there. It was only slightly positive, but let's go see what the chart looks like. So this one, even though we got positive data, the market actually went down, and it was just barely slightly positive. So what happened is the market actually spiked up with that positive news, but what happened is a lot of traders realized it wasn't a big deviation, and they probably closed their positions, and that's what drove the prices all the way back down. Let's see what else happened here. It looks like also CPI came out at the same time. That's something else you need to be aware of. Sometimes there will be two events coming out at the exact same time, and they can conflict. So sometimes there's one indicator that traders pay more attention to than others, and that will be the one that the market follows. Okay, here's a good deviation. New Zealand dollar GDP for the quarter came out, and it came out 0.3 lower than expected. So let's see what that chart looks like. So there's a pretty good move short, as you'd expect. And it started building up short 2 minutes before. You had about a 10-pip move. And then it shot down, what do we got, 78.70, about 30 pips from the minute it opened. So it was a pretty significant move because there was a larger deviation on this event. Okay, let's see if we can look at one more. Let's see here. So there was the franc interest rate came out unchanged. Now with events like the interest rate announcements, I've seen those cause a lot of volatility, even if it's unchanged. But that's because if you're watching some of the news that's being released at like Bloomberg or something, you'll hear some of the comments of why they decided on this, and the Fed speaking, and you'll hear some comments that can actually worry the economy and worry investors and cause them to react. So let's just see what this one did. So see, this one still caused some volatility in there. We get about a 15-pip move, even though there was no change, and then it actually shot way back up over the next hour. Okay. So anyways, let's go look at. Let me show you an event I've mentioned earlier, which is the non-farm payroll. I think that's coming out next week as well. It's usually the first Friday of the month. So let me go over to Forex Factor real quick, and we can change this to next week. And if we look at next week, you can see that here that on Friday there's non-farm employment change. That number causes extreme volatility in the market most of the time, because this one is the most difficult for economists to forecast. So you can see this accounts for a majority of overall economic activity. It's the job creation. It's a leading indicator of consumer spending. So actual number greater than forecast, good for currency. This is a vital economic release shortly after the month ends. The combination of importance and earliness makes a hefty market impact. Okay, so there you go. That one, let's go look at a previous one now. Let's go back over to this one. Go over to Forex Peace Army and look at this month. Let's see what happened in the beginning of June with non-farm payroll or non-farm employment change. And at the same time as this event, you'll get unemployment rate. So that's something you got to be careful of. Some investors pay more attention to unemployment rate. They say they don't care if there was employment change went up, but if employment rate went down like it did this time, a lot of times this will still hurt the currency, even though it had positive numbers here, especially if it's only slightly positive. So the prediction here would be that the dollar would weaken because of this unemployment rate going up. So let's view the chart here. So there you go. That's what happened. See, the market initially spiked up, and then when they saw that the unemployment rate was down, the market shot back down. Now, because there was this confliction of one number being positive, one being negative, you got this whipsaw effect. It was like a double whipsaw effect. So this is the type of event you got to be really careful around, and because it can cause the most volatility. Okay, so now we've talked about what all the numbers mean. Talked about a few different events and how to interpret them, and where you can find a resource where you can go back in time and see how, this is how you kind of can learn how certain events are going to affect the market. Now, every event can cause the market to react differently, but you can find patterns, and there are ways of successfully trading the news. But let me show you guys. On the blog, I posted this as well. There is there's two different software programs that I've actually used in the past that are for news trading, that are able to get the news feed from several resources extremely fast, faster than Forex Factory gets it or Forex Peace Army. They get it pretty much the millisecond it comes out, and as a result, gives you a little bit of an edge when you go to, if you're trying to actually get executed on the news or trying to trade the news. So let me go back to our blog, and I will show you. I'll actually post this link here in the chat box as well. But I posted these two links to, I don't know if you guys have heard of Oracle Trader or Straddle Trader Pro, but both of these are designed to trade around the news. Now, let me copy this link. I'll post this in the chat. Now, if you go to watch the replay, you'll have to just go to the TradeWestForex.com/blog, and on this trading the news post, go down to making money during the news, and you'll find those links. But let me give you guys this other one too. Okay, so I'll just go ahead and show you. I know that the Oracle Trader software program, they made it private for a long time, and I've noticed lately that with that link you can get they've got a limited opportunity to download the software and try it out. And I know they have like a live trading room where they use the software and talk about certain deviations they're looking for and how to set things up. So you guys can try that out. They'll email you a download. And then the one that they created after that is this other one here, the Straddle Trader Pro. And they've got a big article they've written about that. And you can read how that works and try these things out if you're really looking to try to trade the actual news and profit from the spikes. You can try to use these software programs. Or even if you're using it for more of the swing trading approach, this could even help you with that. Now, you don't actually have to have the tools. You don't have to have the tools to do the trades, but I've done different things where if, like, say, Momentix is already giving me a signal before the news and it's in the direction of the major trend, I will take the trade, or I'll stay in the trade and just tighten up my stops, even though I'm taking a big risk. That the market could move really fast and I could get stopped out, or further than my stop. I found that if you take the direction of the trend and Momentix signal, even that's been working pretty well. So I think that's pretty much everything. the key thing here, if you're planning on doing anything around the news, is that that you're managing risk properly. Don't put on too much risk on any of these news trades, because you just never know. I mean, things like non-farm payroll can move the market hundreds of pips in a few minutes. Sometimes even seconds. A 100-pip move can happen, and you just won't be able to get out if the market's moving that fast. So you just need to make sure that if you take a loss, that you set your risk up for that. So even if you put in a 20-pip stop, for example, and you're thinking that's only going to risk 1%, well, if the market shoots up 100, you could hit a 100-pip loss and actually lose 5% on that trade. Or if you were risking 5 and that happened, you'd lose 25. That's way too much risk. So properly manage your risk when you're trading these kind of events. And so if you guys have any questions, I'll do some Q&A now, and then we'll be wrapping things up here. Looks like Harold is saying that with these kind of tools, it really depends on your broker. Most of the gain is cut by huge spreads, and that's right. When news comes out, the market spreads will start to widen, and I can show you that. Let's see, I'll just get my drawing tool out here. Let's go back to the chart. Okay. So I'm just going to draw on here for a second and show you guys how this will kind of work if you're watching the news. If you notice over here, of course, you've got your spread and your broker's platform. I'm going to get a different color. Okay, you've got the spread and whatever your broker's platform is. You just look at the bid and ask. And if you're using something like PipStat, one of our software programs, I'll show you that. It actually shows you the spread here right in the middle between the two prices. So right now my spread's great, 0.7 of a pip on the U.S. yen. But what happens is as you're approaching the news, and this is partly why when I was showing you guys that 1 minute, 2 minutes before the news, the prices were moving, it's because of the spread changing. And what that means is right before the news, basically when you're going to sell, you have to sell it where somebody else is willing to buy with a limit order. So basically somebody else, a liquidity provider, or if a broker is using decentralized or centralized liquidity, they are able to use all of their traders' limit orders as liquidity for the rest of the market. And so that means somebody else has to have a limit order for you to be able to sell here, or another provider. So basically what happens is right before the news, they don't want to take that risk either. They don't want to be at risk of being on the wrong side of the market. So they will start to remove their limit orders. And this happens on both sides. They don't want to buy over here. They don't want to put a limit order to buy, so that people start to widen their stops or limits. And they don't want to sell to you at that price, because if the price moves up, they had to have sold to you at this price. So what they naturally do is they say, I'm going to move my limit order up in case the market does move up first, and I'll get a better price to sell at that way. So that naturally moves the spread up, and this one goes down because they don't want to buy at this price. They'd rather buy it down here lower, so they will put their limit orders down. So that's what happens right before the news. Everybody moves their limit orders, whether it's retail traders, banks, brokers. It could be anything. And by doing that, the market starts to move around, and they keep adjusting them. One side goes up, one side goes down, and then that's why you get all that movement right before the news. And it's really the same thing that's happening during the news. Once the news comes out and the market starts taking off, that is because traders are buying these limit orders up. If it starts to go up, traders are buying these limit orders, and as a result, the spread is widening, but then limit orders get replaced. They're starting to tighten their limit orders on the other side. So I mean, that's a different subject. I probably already confused you guys, but that's what Harold's right, that the spreads can widen during news events. So you've got to be careful with that as well. Which broker would you suggest for trading Forex? we trade with FinFX. Let me post you a link. Okay, let me just post this real quick here. Okay, so I just posted a link to FinFX, and I can show you. That'll just take you directly to their trading accounts page where you can open an account or try out a demo. But this is the broker we trade with. They still accept U.S. citizens, and with up to 1 to 300 leverage. They say 200 on micros, but you can make a request and get 300. And they still allow hedging and first in, first out and all that stuff. So they're one of the few that still offer that. Will you explain how to trade news? Well, kind of some of the things I've shown you. I've showed you how it all works, but I can show you specifically how you might trade the news and go back over another example. So if you're looking at if you're looking at Forex Factory this week, let's go back to this week here. Okay, there was U.S. home sales. Now that one did have a revision, quite a significant revision there, but maybe not too bad. Let's go look at this one. So I could see the 27th. If you were trading on the 27th, let's go back to Peace Army now. Let's just go look at the 27th here. Okay, so this is pending home sales at 8 a.m. and it might be, let's see, pending home sales right here. Okay, so what you have, if we go over here to Forex Factory, I click on detail, you can look and see, okay, I got a high impact news event at, this is 10 a.m. Eastern, it's 8 for me, Mountain Time. I could say, okay, if the number comes out greater than the forecast, that should be good for the dollar. This is going to affect the dollar. So if I trade something like the US yen, I would want to buy it if the number comes out greater than the forecast. So the forecast was 1.1%. Now, as you'd be counting down to 8 a.m. for that news event, this number is going to come out. And this is where you probably would want to use something like Oracle Trader or Straddle Trader Pro, because they are going to pull the trigger for you and get you into the market, immediately, because you really don't have time for delays, because the spreads will really start to widen a lot and you won't get filled. So, but if we go over to Peace Army now on that event, I can show you what the chart looks like. And sure enough, it went up. So you would have bought the US yen knowing that it went higher, the number came out higher than forecast, you would have immediately bought right here. And as a result, the market went up 15 pips in 3 minutes. So that's how you would trade this news. What I'd say, if that seems confusing, you're still not sure, I mean, like the link I just gave you guys, this is to a link that I found that still offers it to try it out. And they'll show you exactly how this all works, and you can play around with it with their software. Okay, so let's see. Kenny is saying that Tolonex.us also accepts US clients. Okay. Any other questions here? FinFX is not regulated broker, not reliable. Well, FinFX actually is regulated, and they just recently got this AAA rating. That they are regulated by. Let me see if they probably have it right on their website here. Let's see, possibly even on their FAQ page. Yeah, is FinFX regulated? So Forex is not regulated in Finland and is not considered to be an investment or financial investment. However, a client is protected by Finland's general legislation, including Commercial Code and Consumer Protection Law. We subject to Companies Act. So they're not like the U.S. where that's why they can, you can get away with higher leverages and different things. But really, what it comes down to is, I think, I've had experience with them. I've traded with them for years now. Others have traded with them successfully. I know there's some different brokerages that are not regulated and can cause you all kinds of problems, and I've experienced those as well. But it's really up to you. I mean, I don't know about this Tollinex that Kenny's mentioned. There's also Pepperstone, but they are for non-U.S., and I think they're in Australia. So I mean, there's a couple different options. And if you want to stick with the U.S., let's see. I know we had some of our traders that were trading some U.S. accounts that are done well. Forex, FS, Pax, Varchev, Smart Trade, Profit, FX. So Charles has given us a couple of them that take U.S. clients. So someone here is saying that they like Oanda, but the leverage is 50-1 because they are regulated by the U.S. Now, sometimes certain strategies you don't even need more than 50-1, or it's there's only certain situations where you really need that much leverage. If you're taking a lot of trades at once and trading aggressive, is when you start to need that higher leverage. So I think we've answered some good questions here. I think we're going to close things up. If you ever have any questions, you can just go to our homepage even, and I think you can just go up here to help and click live chat, or down here you can see it says chat with us. You can hit that, and we can help answer any other questions you might have. So thanks everybody for coming this week. We'll get this recording up so you can review it, and hope to see everybody in next week's session, and we'll let you know. We'll do another blog post and let you know what that topic will be. So everybody have a great weekend, and we'll talk with you next week.